All right. Let's give a few moments for users to join. Hello, everybody, and great to have you again for another episode of the Blockchain Student Corner. This is actually the fourth episode, and we're so excited that we have had numerous guests on the show to share, their experiences around blockchain education, how to trade, how to set up your Binance account, how to do a whole lot of things on the blockchain, right? So today we have two exciting um, um, influencers who are going to be sharing. They've actually been on the show. They are like regular guests on the show, and they'll be sharing with us, how to build a well balanced crypto portfolio in the blockchain industry. So before we go into the conversation of today, I'd like to welcome you all again, and by way of housekeeping, we always take questions at the end of the class. So if you have questions, do well to jot them down, and when it is time, you then type them into the comment section, and we will be able to attend to them as much as we can. But also, we would share links to our communities at Binance Africa at the end of the call, so that if you have questions relating to Binance products, Binance features, you can ask questions in our community, and somebody will be on hand to answer your questions. So we would also be sharing those links at the end of the call. And finally, we will be having an update as regards Binance KYC, especially for Nigerians, and we'll share that update with you at the end of the call. So, with that out of the way, I would like to give the opportunity to my guests to share to first introduce themselves before we get on to the conversation for today. So let's get off with El Priest. El Priest, do you want to tell us a little about yourself? How are you doing, man?
Yeah, good afternoon, everybody. I am a priest. I'm a veterinary student from Ahmadu Bello University. I am Binance Campus Ambassador representing Ahmadu Bello University. I'm a crypto trader and I do product design as well. Thank you.
Great. Good to have you on the show again, El Priest. El Priest has been an ambassador for over 2 years, and he has contributed massively to the growth of the the crypto student population in his university. On the show also we have Amek. You see, his name is Amek Nation. Do you want to tell us about yourself, man?
Hi guys. So
Hi.
Amek, and basically I do mostly growth marketing, and I'm an ambassador for Ego, and I'm a content creator at Binance as well, video content creator.
Great stuff. Good to have you on the show again, Amek. So, like I said before, we'll be talking specifically on how to build your crypto portfolio, a very well balanced crypto portfolio at that. So let me allow Amek to do what I would call an introduction. Tell us about what you think crypto portfolios are. Just take it away, and then we'll allow LPs come in just after you.
Okay, awesome. Hello guys. My name is Amek, as I introduced myself earlier. So before I go into what exactly is a crypto portfolio, I would like to do some introductions which will be necessary for you, especially as a newbie. So if you're a newbie on this call, this is for you, right? So when it comes to investing in cryptocurrencies in general, right? So there are three entry areas when it comes to investing, right? So, and if you want to invest in the crypto space, you have to look at whether you want to buy some coins on a centralized exchange, on a decentralized exchange, or maybe you want to participate in a token sale. Those are the major three areas that you can use to, you know, get into crypto investing in general, right? So, When you talk about centralized exchanges, you have Binance, right? So Binance is the first centralized exchange, the biggest actually. Then you can talk of something like FTX. It's they are also trusted. Then maybe Huobi as well. There are a lot of centralized exchanges, but those are the top three on my list for today. Right. So when you talk of decentralized exchanges, you need to look at something like Uniswap, which is the biggest decentralized exchange. Then maybe PancakeSwap, which is on BSC, the Binance Smart Chain, and something like Radium, among many others. Right. So, but those are the major ones. The reason why I'm mentioning these things are because if you want to get into crypto investing, there are things that you have to, have into place. If not, you will not be able to invest in some cryptocurrencies that would form your crypto portfolio. I'm coming to crypto portfolio, guys. So the third part is looking at IDO platforms or token sale platforms, right? So you have to be very careful about this, which is why I do advise people that are new to the market not to participate in token sales immediately, right? Try to go through IDO platforms that are trusted, because when you talk about token sales, there are a lot of shitty token sales out there, a lot of scammy token sales. But when there's an IDO platform that is recognized and trusted, then you can trust them with your money and invest in some potential good crypto projects that would make up your portfolio. Um, it's freezing. So the third part I want to talk about is let's say you want to have a crypto portfolio. You are also going to need some wallets that is going to enable you to, basically store the coins that you want to have in your crypto portfolio, right? So the wallets I could recommend in this session are Token Pocket, Safe Power Wallet, and Phantom, among many others. There are a lot of them depending on which coin you are investing. So now that you know all these things, what exactly is a crypto portfolio? So a crypto portfolio is a collection of crypto assets that you have done proper analysis and research on, which you decide to. Can you guys hear me?
Yeah, we can hear you.
Yeah, so I said a crypto portfolio now is a collection of crypto assets that you have done analysis and careful research on, right? And you have decided to put these crypto assets into a collection, right? With the goal of making some substantial gains on these cryptocurrencies. By putting them in the collection, you are putting them in a well-respected and organized manner, right? So, and it's going to be able to give you an oversight of, okay, I have 10 coins in my portfolio, and I'm expecting maybe each of these coins to do, let's say, a 5x return. And after those 5x returns, this is going to be my profit margin. This is how much I'm going to invest back into the market, and various variables like that. The reason why a crypto portfolio is very important compared to, just randomly buying coins is, like I said, it's organized. So, and when you are doing something organized with a plan, then the chances of success are much higher than if you just go around throwing money into anything, right? So crypto portfolios are very, very important to have a concrete plan and a concrete schedule of how you want to invest in crypto assets and make gains, and monitor those gains as time goes on. Right. So let me hand it over to El Priest before I talk about sorry.
Yeah, sure. So please take it up from there. What do you think? Or what do you what how would you introduce crypto portfolios to new users or OGs in the space?
Okay, in a simplified explanation, crypto portfolio is simply the collection, like a collection of crypto assets of either an investor or a trader. So portfolio portfolio can generally be classified under both traditional portfolio and the crypto portfolio. But as for today, we are discussing about crypto portfolio. So it consists of the cryptocurrencies you are holding, your investment in crypto assets. So how to balance the crypto portfolio. So I'll be explaining this from my own point of view, from um from the ways I have tested and it's working. So generally, Everything depends on your income, your investment strategy, and the class of assets you want to um, invest in. So, what I do with my portfolio, I make sure my portfolio is divided evenly. There are two types of investments. There is capital gains, there is cash flow. So I use this strategy to arrange my portfolio in such a way that either the coin is dumping, I am still making gains. So I have a simple formula I use for that: 50, 30, 20. So my income, 50% income goes into investments, 30% goes into savings in BTC and Ethereum. Then the remaining 20% stays in stablecoin. So the first 50% um, is like a well researched list of assets, at least 10 of them. So I pick from different aspects of the industry like DeFi, NFTs, exchange, exchange tokens or coins, ecosystem tokens and coins, um, and probably gaming. So my 50% covers this aspect. The remaining 20% and the second 30% goes to BTC and ETH because I believe you can't go wrong with these two. Even if all other crypto assets die, even though if all other crypto assets collapse, I believe Ethereum and Bitcoin will still be around. So what I do is I take my profits from the other 50% and always dump it in my Bitcoin and Ethereum holdings. The remaining stable coins, I don't leave them in stable coins. I use a protocol that generates yield for me on holding stable coins. So instead of just holding stable coins and just leaving it there, I make sure the stable coin is also bringing money for me. So that takes us back to the two investment strategy that we have, which is the capital gains and the cash flow. So capital gains is like buying a commodity, um, then you wait for its value to appreciate, then you sell. So let me use land as an example. I can purchase a piece of land for 1 million naira now, and let's say in 2 years' time, the land will be worth probably 2 million or 2.5 million. So that's like a capital gain. Then for cash flow, I can buy a land, build on it, then rent out the properties to people. So either weekly, daily, or monthly, the house is generating income for me. Then as well, I still have the land, and the house I built on top is generating income for me. So automatically, I am making money both ways because if I decide after 2 years I want to sell the land plus the property, I will be getting at least threefold of what I invested originally compared to
Mm,
someone that just bought the land and waited for 2 years and sold off for a 2x gain. So in my portfolio, I make sure whatever coin I'm holding, I am assured that if it goes sideways, I still have side passive income to cover for my loss. So
mm,
I do this with Radium, I do it with Cake and some other staking POS cryptocurrencies. So I buy these crypto assets, I stake them for a particular percentage yield every month. So
yeah.
in the long run, I know the cryptos are still going to pump. So I am earning both ways, holding and still making passive income for holding. So there's what I call reallocation. I always make thorough research before buying any crypto assets. So after buying, I make sure I follow up. So if at some point probably the team is doing anyhow, no updates, no development, I I'll take loss and reallocate the funds to another asset. So I do this over and over, rinse and repeat.
Mm,
This
mm.
is what I've
So
done.
I like what I like your input. In fact, the both of you have said, quite meaningful, ways to dive into holding different assets in a portfolio. So before we even go further down into your strategies and the kinds of coins you look at, I'm looking at, you know, defining a few terminologies in terms of assets, building a healthy portfolio, right? There is what is called the asset allocation, and there is what is called the diversification, right? So the asset allocation refers to like the investing, like investing in different asset classes, right? For users for attendees who are on the call who might not know what assets are, especially in the industry, um, currently we are talking about the crypto portfolio. So the asset class in this case is cryptocurrencies, right? Not necessarily bonds. There are other asset classes like bonds, metals. There's cash. There's a cash portfolio. There's stocks portfolio. But in this particular case, the assets in question are cryptocurrencies, and diversification here means having a healthy distribution of your investment funds across these assets, these crypto assets, right? So the first thing, you have identified what you want to hold or what portfolio you are looking to build, which is the crypto asset portfolio. And then you're now looking, like El Priest said, diversifying, let's say, allocating some amount, some volumes, some percentage, depending on your budget for investment or for, and for going into this business. So you have to understand those two um, um, terminologies, because most of the time, and in fact in a document we will share with you, you would see explanations that would use these terminologies, right? So I like to look a little at the different kinds. Now that we're talking about crypto asset portfolios, I like to look at like the different kinds of cryptocurrencies that we as maybe portfolio builders want to begin to look at. Bitcoin is actually is like the famous cryptocurrency currently. It has the biggest market capitalization. But holding just Bitcoin in your portfolio is not the healthiest portfolio, right? Doesn't necessarily guarantee you the healthiest portfolio. Why? Because you are narrowing down your risk into just one asset, right? I don't know if Amek, do you want to touch on um what kind of coins do we look out for when we are trying to select or build this portfolio? What kind of coins do we look at? I know that we have payment coins, we have stable coins, we have security tokens, we have utility tokens, we have governance tokens. Which of them do you look out for when you're trying to build your portfolio?
So basically, before I go into that, there's just one thing I would like to state, which is very, very important. This class is to, or is it this session or this, whatever. So
Yeah.
this is basically to tell you, just give you an idea of how you can actually build your own portfolio. What we are sharing during this session is not definite. It doesn't mean because I say you should buy 10% BTC, you buy 10% BTC. Do what works for you, but it only gives you an overview of what you should actually do, right? So I'm going to share different scenarios with you guys, different scenarios, and you can select anyone which you want to select. The basic scenario, the most basic scenario is what El Priest shared in the beginning of this video, where you buy mostly BTC and Ethereum, then you diversify into some altcoins, and you basically reinvest, the money you get from those altcoins back to BTC and Ethereum, because you can't go wrong with BTC and Ethereum. So now talking about altcoins, I'm going to give you guys a perfect scenario. So let's say you have 1000 USD in as an investment capital. That's your investment capital. And you're looking at entering the market with 100% diversification. That you want to diversify to the highest level. I would like to also state that the reason why you diversify is so that you don't put all your eggs in one basket, right? So when you diversify, you can't always be wrong with investments. It's just basically like technical analysis in trading, right? So no matter how much research you do about a coin, it doesn't mean it can not fail at the end of the day. So diversifying basically means you're putting some money here, you're putting some money there, and in various places, so that if one doesn't perform well, the others can perform well, and you can compensate for the losses with those that didn't perform well, with those that performed well. I mean, right? So let's assume you have $1,000, right, which is 100% of capital, right? So when you are talking of crypto portfolios, percentages are very, very important, because it's what help you gauge how much you are putting in a certain coin and which you are putting in another coin. So let's start off with BTC. BTC is very, very important, irrespective of which portfolio you are trying to build, whether you want to diversify a lot or not. BTC is always important. So, in this scenario, we are going to be using 10%. So hold at least 10% of BTC. Now, when you want to buy into BTC, there is this strategy I always tell people about. Your entry price is very, very important into even BTC. Right. So and when we talk about entry price, it means you have to get into the market at a favorable price, so that you don't, panic sell. Because I'm saying, okay, if this is a newbie, for example, you might panic sell if you see BTC, continues dumping and you bought at a really, really high price. Which is why if you want to get into BTC, there are two ways to go about this. You can buy BTC at the current price. Actually, in the next 5 to 10 years, you are going to be up on your investment. This is based on the previous price actions of BTC. Or you can decide to buy, you want to invest 10% of your capital, which is $100 into BTC. So you can decide to buy $50 worth of BTC at the current price, then you hold the remaining $50. When BTC goes down in price a bit to, let's say, 40K or 50K, which is possible, right? Let's be rational in this in this analysis. You can now decide to use the $50 you have left to buy even more BTC, right? So that's for 10%. So the another 10% now, you invest it into Ethereum. You use the same strategy of either buying once, or you buy 50% now, then you invest the remaining 50% when Ethereum drops down in price, if it does, right? So that's 20% gone. The next 10% now, what you want to look into buying is ecosystem gems. Um, when I say ecosystem gems, I'm not referring to coins under an ecosystem. I'm referring to coins that have a mainnet platforms, right? So you have to do more research about this. But for example, we have the Binance Smart Chain, and the Binance Smart Chain is an ecosystem on its own, right? So what I'm saying is, if you buy the underlying coin of an ecosystem coin, right? So there is a really huge potential that that ecosystem could explode and you could make a lot of money. But let's say you are coming to the market and you are very fresh to the market, right? You don't want to invest in those ecosystems that have exploded already. You have to look for the ones that are undervalued, right? So when you are looking for ecosystem coins that are undervalued, we are talking about coins like let's say Cardia Chain, IOTEX, let's say Oasis Network. I mean, these are ecosystem coins that have not yet exploded but have the potential to explode. A good example is look at BNB. BNB, when BNB had the Binance Smart Chain, from about $50, it skyrocketed to over $600, right? So this is why ecosystem coins are very important, and it's why you should include them in your portfolio. The next 10%, which will make 40%, is you invest it into utility-based altcoins, right? So when we talk of utility-based altcoins, these are altcoins that would have a mainnet platform that would serve a certain use case in the crypto ecosystem in general. Utility altcoins are going to be used as some form of let's say utility, basically, within that mainnet platform that the project is building. A good example of utility altcoins, I'm dishing out gems to you guys. So but a good example of utility altcoins that you could look into is GLQ, graph link protocol, right? You can do more research about graph link protocol, right? So they are
Mhm.
building blockchain with graphs and stuff like that. I'm not going to talk about them in this video. Another one is Armor, right?
So
ARMOR, right? So
just before you go ahead, Amek, it's okay for us to, we can go ahead to mention the examples of tokens in these categories, but
yeah,
it's actually best for our users to know how to find the categories first, and then how to
Okay,
identify these tokens.
okay,
So
okay.
I know sometime during this call we'll share our screens and show, different platforms that encourage portfolio building. Like you mentioned offline, CoinGecko, CoinMarketCap,
Yeah,
Blockfolio,
yeah.
all of those platforms. I'm certain that at some point in this call, you'll be able to walk us through how to start as new
Can I
users.
share my screen?
Yes, please go ahead.
How do I share my screen? Okay,
No, once you click on that, I'll add you up.
okay, share screen.
Yeah, please.
Is it
Great.
shared now?
Yes, we can see your screen.
Okay,
So
awesome. So
go to the tab.
um how
Uh-huh.
to I'm just going to go back to CoinGecko so that you guys, so basically this is CoinGecko, right? So and if you want to identify these coins, the best way you can do it is by going to coins here, right? So when you go to coins, you can go to categories, right? So when you click on categories, you are going to see, if you are looking for a smart contract platform, you are going to see it under this category. If you are looking for exchange-based tokens, you are going to see it under this category. If you are looking at investing in some DeFi-related altcoins, then you are going to see it here. Stable coins, Binance Smart Chain ecosystem, centralized exchange tokens, Solana ecosystem, Polkadot ecosystem, Polygon, and there are a lot of them. There are a lot of them, guys. Which is why I'm saying that at the end of the day, this video is just to give you an overview of which coins to put in your portfolio and how your portfolio should look like. You can easily decide to go into play to earn, let's say lending and borrowing and privacy coins. If you decide to select these three categories, then you can go with that and put that in your portfolio, or you can go with the example I'm making. Nothing is 100%. It all depends on you and what you feel comfortable investing into. Right. So, as I was saying, let me go back to the video. So as I was saying, the next 10% goes into exchange coins, because exchange coins are also very, very important. In this video, I'm going to recommend buying BNB and let's say Huobi token. Those are two good examples, right? So, like El Priest also said, investing in NFT coins and or play to earn coins are also very, very cool and important, but you have to do your research about NFTs and play to earn ecosystems, and be sure that you really understand how the how the NFT ecosystem does work, right? So some examples of NFT coins are, let's say, um 2CRZ and RMRK, right? I don't know.
So
I'm not.
hold on the coins, hold on those examples. Um, I know if I allow you, you will give me 10 tokens that will do 100x on this call. I know, and I know a lot of our listeners would love that. But our primary goal should be to help these guys make these decisions themselves, right?
Them.
So that's why I want El Priest to jump in on this. El Priest, tell me why you think stable coins and governance tokens are a good fit in an healthy portfolio. Just take those two stable coins, because you spoke of reallocation, right? And most of the time when your portfolio, or when your initial buys are not doing too well, you find a way to jump out of them at a healthier time, right? At a, you manage your risks, right? So in those cases, which coins do you jump into? Do you jump into stable coins just to give yourself some form of buffer to rest, or what coins do you jump into? And then touch on governance tokens and why they are also valid in this portfolio building.
So stable coins is like edge for me. So mostly I stake my stable coins. For example, I'm staking UST on Anchor protocol. So The UST is actually like a reserve for me, just in case I have another asset I want to jump into. But while holding the assets, I'm still earning from it. So the reason why stablecoin is very important is because it will mitigate your risk by almost 80%. So the chances of losing if you are holding stablecoins is very, very low. Can you guys still hear me?
Yeah, I can hear you. I
Can
think
The
hear you.
Ben is.
the chances of losing if you are holding stable coins are very, very low because the currency is pegged to $1. So if you are holding one UST is $1. It's though
Mm,
a UST can come down, it can also go beyond that, but it's pegged within that range. So with stable coins, you can't lose. Let's just say 95% you can't lose. So as for governance token, it is community driven. So how do I put this?
mm.
Please, can you ask the question again?
So let me come in here, right? Governance tokens, like we already know, are tokens that empower community members to be able to vote on projects and all of that, right? So just like one of the first biggest decentralized exchanges, Uniswap built a governance system where they allowed people to participate. If you held their coins, you'll be able to carry out some votings in DeFi, in decentralized finance, right? Why do you think, or how would I, what will I look out for to know governance tokens that would be successful in the near future? Do I look out for whether they have features like staking platforms, liquidity provision? Those what do I look out for? To
Yeah,
select
yeah,
a very healthy
it's very
governance token.
so the biggest factor is how supportive the community is, because if the community members are not supportive, I don't think the whole governance thing will work. So you look out for governance tokens with very big communities and committed members. So and the staking aspect, governance token that you are able to stake and get returns from. How about that?
Yeah, yeah, makes a lot of sense. Makes a lot of sense. I would like to go back to Amek. Amek, you touched on what do you call it now? You touched on ecosystem tokens, right?
Yeah.
Um, e- Tokens that have mainnets, ecosystem gems per se. Now, what are the things for, because I know a lot of us will just jump on CoinGecko and CoinMarketCap and then just search for ecosystem gems and then begin to buy any of them. So I know in every category there are some coins that might not do so well in our portfolios and they'll just become stale and help us stay stagnant, which is what we're trying to avoid. So what am I to look out for, in these ecosystems? Take for instance the Solana net. Why should I plug into um, networks like the Ethereum network, the Solana network, the BSC network, the Cardano network, all of those? Why do I need to? What am I looking out for in those
Um,
ecosystems?
um, Ben, you cut me short when I was talking earlier. So, but
Ah,
I wanted
boy.
to say something very important, which is investing. So basically, when you're allocating various percentages to various categories of blockchain projects or crypto assets, as Ben said, one very important thing is you also have to keep a USDT reserve. Okay, I think your priest mentioned that. So, but the reason why a USDT reserve is important is because if you have a USDT reserve, if you have any emergencies, I mean, you can get ill for crying out loud. I'm not praying anyone gets ill or something, or you might have an emergency. And that USDT reserve is what you're going to use to solve that emergency compared to selling your crypto assets in your portfolio, right? So this is why it's very, very important. And if you panic sell, especially when the price is going against you, then you miss out on, when the coin goes up. So the question Ben asked me now, he was like, ecosystem gems, what am I supposed to look out for? The first thing you have to look out for when you want to know which ecosystem gem you would invest in is the developers and how the development looks like, right? So because at the end of the day, in the crypto space, everything relies on development, right? You have to go with an ecosystem gem that has a programming language that is widely known and used by a lot of programmers or a lot of developers, right? You also have to look at the fact that how many developers are involved in the ecosystem, how many developers are coming onto the ecosystem to build something. Look at how much is the how many like what's the influx of projects coming to build on that ecosystem. Okay, the projects that are actually building on that ecosystem, how I don't know which language to use for this. How is the quality? I mean, basically, let me not use quality. What is the impact of what they are building in the crypto ecosystem, right? So what they are building in that ecosystem, does it help the general crypto ecosystem as a whole, right? So
Mm.
if they are building things that will have impact on the crypto ecosystem, you should be able to identify that crypto ecosystem, that coin ecosystem is going to be one that you should really watch out for, right?
Yeah,
So
yeah. Two things I pick. Thank you so much, Amek. You've actually
yeah,
touched on a whole lot. Two things I've picked from yourself and El Priest. El Priest talked about understanding the power of their communities.
yeah,
Every project is seeking to build an ecosystem, right? Most of them do it with the support of mainnet of platforms that have mainnets. They build on these blockchains, right? While others try to do it themselves from the scratch, right? So you need to understand the community, the strength of the communities, and then you need to also, like Amek has said, understand what they are looking to achieve in the near future. It's easy for you to look at the Binance ecosystem and say these guys have, they have the future of blockchain at heart, because you see, we are at Binance. We are always innovative. We are always innovating, bringing up new, taking part in virtually every aspect of the industry, right? And these are the kind of things you want to see if you're looking out for projects that will do so well. Now, creating activity in your ecosystem will promote utility for your token. That's like the psychology around it, right? So if there's activity, a lot of activity, a lot of features that, take for instance, the BNB is used to power, um, um, it powers the smart chain, the BSC ecosystem, right?
yeah,
It
yeah,
also,
yeah,
it powers the exchange, it powers a whole lot of things. These are in turn going to give the coin good value, whether we like it or not, right? So these are the things you. That's why your call, or your initial call on coins to buy, you mentioned BNB. I was nodding my head. I was like, okay, that's fine, because I'm certain that, okay, there's a very good future for these kinds of projects. So I think we are making progress, guys. So what I'm going to do now is, for the next segment of this call, I'm going to mention a few tips on how to, build this portfolio. I'm going to do a summary, kind of like what we've talked about. And then when I mention each tip, I'll allow the guests to talk about them in just 1 minute. Okay, so the first tip is, right, split your portfolios between high, medium, and low risk investments, right? And give them appropriate weightings, right? A portfolio containing a large portion of high risk investment is definitely not a balanced portfolio, right? It might have the chance to provide you bigger gains, but may also cause huge losses on your side, right? So your risk profile will determine what's best for you, but there should be some mix. So the first point we gathered here is that you should first be able to split your portfolio into high, medium, and low risk investments. El Priest, do you want to share on what you consider high, medium, and low investments?
Yeah, sure. Um, let's take newbies for example. You see a newbie with a concentrated portfolio of just shit coins, it's automatically high risk portfolio because the possibility of those shitcoin making it through a year is very very thin. So medium risk portfolio consists of assets with use cases, assets with prospects, assets that are promising, assets that will still be relevant probably in the next 5-10 years. You understand? So the lowest risk portfolio is that of holding stable coins and getting yield in return. So when you are setting up your portfolio, try as much as possible to make sure the high risk is very low. The high risk assets are very, very low. So the high risk assets being the meme tokens, the shit coins and all that, and all these projects flying around without use cases, just English. So you make sure they are the lowest ration of the portfolio. So and try as much as possible to always take profits from those assets, then push them into the medium risk portfolio. So those in the medium range are those with utilities, promising future, they have prospect and all that. So you are taking your profit from the high risk to the low risk. And you are not investing much into the high risk portfolio because if you lose na village. So from
Mhm.
the medium risk, you are taking profit from the medium risk portfolio, you are putting them into the lowest risk portfolio. For the low
Great.
risk portfolio, I believe it consists Bitcoin, Ethereum, and USDT. Bitcoin will not give you 5x return within a year. Bitcoin will not give you 5x return within a year. I don't know about Ethereum, but the risk is very, very low. Bitcoin is the most secure cryptocurrency asset. If you are using a good wallet, there is very low or zero chances of losing your Bitcoin, and Bitcoin will still be around for as long as possible. So it's kind of like a low risk investment portfolio. Same thing with Ethereum. You know how big Ethereum is, so you can't go wrong with these two. Plus the USDT, which is like a reserve for you to stack BTC and ETH. You are taking profit from your shitcoin, from your meme tokens, you are putting them in utility tokens. So from the utility tokens, you are taking the profit and you are loading up BTC, Ethereum, and USDT. Then you are good to go.
Great, great stuff. Please, Amek, just jump on that 30 seconds and I'll go to the next summary.
Sorry, what was the question?
Since you didn't get it, don't stress. But it's kind of like a summary, not a question. We're like putting together all we have discussed, and we are saying, first of all, you have to split your portfolio into three different investment categories: the high risk investments, the medium risk investment, and the low risk investments. Amek just Elpris just did some justice to those three categories and even went further to assign the kinds of tokens or coins to hold in those categories. I'm saying, do you think or what do you think qualifies as high risk, medium risk, and low risks?
Well, basically, high risk, in my own opinion, are those coins that have a lower market cap, and low risk are those that have a bigger market cap, like BTC and Ethereum, like LP said. Then medium risk are those that have a mid kind of like basically market cap, right? So somewhere
Mhm.
around, let's say, um, 300 million to almost a billion market cap. You would know those kind of coins are already building something, and they have some, they have some level of trust. They have some level of achievement in the ecosystem already, right? So, and when you talk of over a billion to, like maybe a trillion or whatever, then those ones are the like low risk. Then basically
Mm,
that's
mm. Smart. Okay, so let's go to the second point on this summary. And this
Yeah.
is something that both of you have touched on severally. I'm just going to highlight again. We might not necessarily explain on this. So it says consider holding some stable coins to help provide liquidity for your portfolio. Liquidity in this sense is, the principle is always buy low and sell high. In the case where you have bought, but it has gone low, you need to buy some more, right? So the question now is, where will I get the coin or the money to buy some more? So stable coins in this sense is what will help, help give us that buffer to be able to buy more. So stable coins is available to, provide some more liquidity for our portfolio. Number three thing there is to rebalance our portfolio if and when needed. The crypto market is actually very volatile, and like El Priest said, very important for everyone to know when to cut their losses. um Depending on the situation you are currently in, if you bought into a project and it's not looking promising, there's nothing wrong with, exiting such projects, to either go back to stable coins and watch the market, or jump going into another project that you feel is good for you at the time. So rebalancing your portfolio is very necessary, and you can do this with very good research.
Um,
um
one, you missed something.
Please go ahead.
I mean, if you also know when to take profit is important.
Obviously.
Yeah, because they are shit coins and they are not going to last forever. So take profit and invest them into.
True. In fact, that's actually the definition of rebalancing, because you might want to, if you hold 50% of very legitimate coins, and you hold maybe 20% of let's not call them shit coins because it's not nice, but if you hold 20% of, upcoming projects, and you have seen some good profits there, like Elpris said, there's nothing wrong with, moving some of those funds, some of those profits, to either stable coins or other portfolios. So moving them to stable coins is you taking profit. Moving them to other cryptocurrencies is you, taking more risks. All right. One more thing before I that we can talk on. Um, don't overweigh um on your portfolio, right? Don't push too much capital to one particular coin, just like saying putting all your eggs in one basket, because it might get you to become a bag holder, right? Imagine buying a coin that is going the opposite direction of every other coin, right? You will not be able to you'll not be able to do anything. You just be held in a fix. So kind of like allocate healthy portions of your assets to, your portfolio, and let's see how that goes. Another important thing that we have stressed here, but I want to, stress further, is the DYOR. Do your own research. You must be able to research. These things we are discussing on are not basically, just we are not born with them. You have to look out for them. You have to look out for, and there are many places to do research on. We talked about how to know rare gems, how to find rare gems some time ago on this show. Amek and Priest, I remember you guys contributed very massively to this part of the conversation, where you first know how to search for, to profile a product, profile let's say a coin or a project. You have to be able to understand, what is this project about, where are they coming from, what is their community like, what is the vibe in their community, where can I find some form of validation, have they been, where can I find more information about the coin, can I know more about the founder, all of those details. Once you put them into play, it will affect, it will be, you'll be able to have made, a very valid decision, and research. Do you want to talk about this, El Priest?
The research aspect.
Yes, like doing your own research, how it helps you to build a strong portfolio.
Okay. Before that, I would like to mention two things, two things that can kill your portfolio: negligence and inability to follow trends. So, from my own mistakes, I do my research, buy in, then wait, then I neglect them. I don't do follow ups. So eventually, um, something might have happened. Probably team misbehaved or product flopped or there's a hack or something. Then your investment end up going to zero. So if you are setting up your portfolio, it is very, very important to always follow up with the project weekly, daily, or monthly. Just try as much as possible to follow up, see what's happening in the community, see what people are talking about, check for the sentiment. Is the sentiment in the community still positive or it's a negative sentiment? So this gives you an insight of whether to stay or to jump out. People are building good products, but sustainability is very low. They can't sustain it. And there are people that are coming with better products. So people move from this product to a better one. So you have to follow up. You don't have to neglect them. Then follow the trend. So as per the research aspect, I have tools I use for my research. So most of my gems come from Twitter and Reddit. I I belong to so many groups, subreddits on Reddit. Then I follow a few guys on Twitter. So I just randomly check what are people talking about. These people, what are they talking about today? So when I get one, I grab it. I go to CoinGecko, check details about the token if it's listed on CoinGecko or CoinMarketCap. I will read up about their products. I'll follow up on the team who is building this product, who are the people behind this product. Then the most important is community and hype. You need to be very sure that the community is committed, because this one buy, and I go pump the assets. So apart from that, um one thing is very, very important: the private sales and the sales generally, which will determine your entry. So I and Amek were discussing a few days ago. I introduced him to a particular token. Then the token is already trading above I think $1.2 then. And I didn't check about the private sales and the seed sales. So I discovered that the sale price was 0.05. So people who bought from private sales, public sale, and all that, they were already in profit, like up to like 20x profit already, or more, some 25x already. So this set of investors, they are ready to dump their bags. So you jumping in at that price, at the current price, you are really jumping into fire, because when these guys dump their assets, everything dumps all on you. Then eventually, if you are not patient enough, you end up selling for loss. But it's not that the token is bad, or it's not that the product is not good, but you are entering the market at the very, very wrong time. So every tiny information is very important. Every little
Mhm.
information you can get hold of is important. There are some projects, they have good products, but you end up hearing that no, this CEO don't run one scam before, that kind of thing. So you just check online, check their profile, their track record, everything, before you settle like, no, this is a gem. Now I'm buying. I think that's
Mm,
good enough.
mm. Interestingly, I saw a comment from Tahiru in the comment section. He says that is actually where your networking strength comes to play, right? So, depending on your sources of information, where do you get your information? How strong are you in terms of crypto communities? How many crypto communities do you belong to? These are the things you need to look out for when you're trying um, um, to bring out rare gems, as it were. Um, the final thing I wanted to add is this is kind of like the best of all of the advice. of all of the chats we've
Um,
had today.
Ben, Ben, I
Yeah,
would just
of
like to
course.
add one thing to what LP said.
Okay, please go ahead.
Elvis mentioned the private sale. But one other thing that is very important is who are the backers, who are those that are supporting that project. And when I talk of backers, I'm not referring to the community, I'm talking of those VC capitals that are behind the project. If a project doesn't have good backers, then it's not going to go anywhere. They need some really strong backers to support the project as well as advisors. So that's also important to check.
Great, great, very, very key. Know who are the people that believe in this
Mm. Is it my network?
know. You guys hear me?
Yeah, we can hear you now.
Okay, I broke off for a bit. All right, let's. I was going to mention the last thing. I know you guys want to talk on this last thing once I mention it. So this is
Yeah, breaking off again.
tell doctor. So this is the last piece, right? Invest only what you can afford to lose. In this case, to maintain a solid portfolio, invest only what you can afford to lose. Does anybody want to touch on that?
um or maybe okay. um Investing only what you can afford to lose is very, very important, because one thing you have to look at when it comes to crypto and blockchain. So Bitcoin was created about was it 10 years ago, right? Over 9 to 10 years ago, right? So but what we are looking at here is the whole blockchain in general. It's an experiment. I mean, even Satoshi Nakamoto, who created the blockchain in general, he just did it as a form of experiment. He was trying something out. He was trying to just create something, right? So at the end of the day, whether you are investing in Bitcoin, in Ethereum, in an altcoin, whatever you're investing into, it's all still an experiment, right? Like you're still basically investing in something really, really new. If you see a new altcoin come to the market, it's basically a new idea, someone's new idea to improve something else that is already in place, right? So it's all an experiment. So you shouldn't invest all your money into it, because I mean, why invest all your money into an experiment anyway? It doesn't make any sense. Even if something is guaranteed 100%, you still shouldn't invest all your money into it. Talk less of something that is, I know it's a really fundamental experiment, but it's still an experiment. It's still something you are trying to figure out. You don't know everything. It's very, very important not to invest all your money. Then, if you don't want to be homeless, better not invest all your money. That's just it.
Great, thank you so much. Praise, do you want to touch on that
Okay.
too?
In addition to what Amek said, um, nothing is guaranteed. You have to understand that nothing is guaranteed. I know we have been stressing in that Bitcoin is secure, Bitcoin is this, Bitcoin is that. But what if they hack your wallet? What if you lose your seed phrase? What if the exchange rug pull? Anything is possible. So there is no guarantee that no, this coin is going to do 200x, and there's no guarantee that the coin is going to zero. So you should be in between. Don't be negative, don't be positive, just be in between. Just believe that it can go up, it can go sideways. Even if the coin pumps, what if you lose your wallet? Anything can happen. So it's best to mitigate your risk. Just use the amount you can afford to lose.
Great stuff. So thanks everyone for being a part of this conversation. Like I promised earlier on the call, I said I was going to share, a link to where you can read about how to build your portfolio. For those of you that do not know, Binance has an academy that powers crypto education from ground zero to ground one. So if you are very new in the crypto space and you would like to kickstart your journey, you can sign up to just um click on Binance, click on the link I'm going to drop, and you'll be in the academy already. Let me quickly drop this link. This would help you, make, like, take in everything that we've said on the call today, and see how you can begin to uh, practicalize, step by step, begin to, internalize, begin to execute, because it's not just about, listening to these things. You need to begin to practically learn about them. Before I let us go, another important, very important part of this conversation is the crypto trackers, the crypto portfolio trackers that are, very familiar and that we use. I know Amek mentioned that he uses CoinGecko and CoinMarketCap. Um, do you want to do? Have we done a quick walkthrough on how it works? I'd like to see if the users can understand how, to build a portfolio on CoinGecko or CoinMarketCap, whichever works for you, Amek. You're muted.
Can you hear me now?
Yeah, yeah, we can hear you and we can see your
Are
screen
you,
also.
you can see my screen. Okay, awesome.
Yes.
So let's go to CoinGecko. I'm just going to be using CoinGecko as an example here. So basically, I have my portfolio on my phone, but since this is my laptop, but it's still the same process. So the first thing you have to do is come to coins. That's the most important aspect. So if you want to see coins by their market cap, you come here by recently added coins that are new to the market. If you want to see the various categories, you can come here, discover here. Here you can see the coins that are performing, with the highest returns and the lowest returns, high volumes, and the likes, right? So let's assume you come to categories, and you basically want to look at smart contract platforms, right? So let's say we are selecting Ethereum. All you have to do, okay, let me see. Let me log in. Let me log in. Okay. So let's say you select Ethereum. You can see if you want to select Ethereum here, you can click on this star and you click on add to portfolio. Now you create the portfolio name. Let's say long term is the name of the portfolio, right? So let's say we are creating a new portfolio that is long term. So start your portfolio. It's going to bring a notification, and when it brings this up, let's say you want to start, you want to buy some Ethereum. Let's say you are buying 0.1 Ethereum. Then you click on submit, right? So automatically, um the Ethereum 0.1 Ethereum has been added to your portfolio. By the time you click on portfolio here, it should come up. Let me try and reload that. I don't know why it's not coming up. Let me add new coin. Let's say I'm adding Ethereum. Ethereum. Yeah. So when you add Ethereum, I don't know why it's not working. Maybe it's because I'm using a laptop. But basically, that's how you add coins to your portfolio, and you include the amount of that coin you have is going to be reflecting there, and you can track it from there. I have never used my laptop to manage my portfolio before, so I'm not really sure about this. Okay, this is the button here, add transaction. Okay, so let's say 0.1 Ethereum, and you add that.
Mm-hmm.
So you can see now in your portfolio you have Ethereum. If you want to add another coin, let's say you want to add Bitcoin, right? So you just input Bitcoin, and when you add Bitcoin, it's going to be there. Then you click on the plus to add the transaction of how many Bitcoin you want to hold, and let's say 0.001 BTC, right? So you click on submit, and you can see Bitcoin is now added to your portfolio. So this is how you'll be able to track your portfolio. If you want to add another coin, you simply click on add another coin, let's say Moon River or whatever. Then you click on the plus and you input the amount of the coin that you have bought, right? So at the end of the day, you can have list of maybe 5 to 10 coins in your portfolio, and you can see how well those coins are doing. You can see the total balance, the 24 hours increase on your portfolio. the profit and loss margin. This helps you know if your portfolio is performing well or if it's not performing well, right? So
Mm.
that's how to have the portfolio. Then if you are looking for categories, you can simply go back to any category you want. You can go back to, let's say, maybe Binance Chain ecosystem, right? So when you click on that, you are going to see the coins under the Binance Chain ecosystem. And if you want to add, let's say, pancake swap, which is cake, right? So you click on cake, you can do analysis on cake, you can see the basic information about cake, then you go back to your portfolio and you add it to your portfolio. At Ben, is that sufficient?
Amek, do you know
That's
about
good.
Xerion?
Um,
Xerion, Xerion,
yeah, we also
Xerion and Coins.
yeah, we have Xerion too. It's a
Yeah,
DeFi asset management platform. And the advantage of
exactly.
Xerion, Ben, should I open up Xerion?
Why not?
Okay, so the advantage of Xerion is that you can manage your portfolio across various chains. Let me see. I'm going to connect my wallet, and I'm going to see how. Let's say okay, wait, cancel. I'm going to switch to um the Ethereum mainnet. Okay. So basically, let's say I want to connect with MetaMask. No, not this one. Yeah. So let's say I'm connecting with MetaMask to Xerion. I'm going to show you guys why Xerion is important. I don't know. We should be connected now. Right. So the reason why Xerion is important is because it's going to show you all the coins on various chains. Right. So, and you can also view your NFTs all in one place as well. So let's say, for example, if you go to overview now, you can see your coins on the Binance Smart Chain. You can see your coins on Polygon Chain. You can see your coins on this is Ethereum, I guess. Yeah. So this is Ethereum. You can see your coins on various chains as well. Then you can add another wallet here to your watch list. So for example, now let's say you don't want to connect a wallet to the Xerion platform. You just want to view that wallet. You can also do that as well, right? So let's say my watch list. Why is it not clicking? Yeah.
So
So
this
if
is
you want to
Xerion is
track,
basically for DeFi products, right?
yeah, but it's very nice to manage your portfolio and add assets and stuffs like that. So you can decide to just watch a wallet without connecting the wallet, and you can see on various chains on Binance Smart Chain and stuffs like that.
Hmm. Hmm.
So um,
So
Some
that
people
means
might be scared of.
it brings together platforms like BSC Scan, ETH Scan,
Yeah,
yeah,
um, Tron Scan.
everything all in one place. Then we have Crystal as well. We have Crystal as well. There are a lot of platforms to manage your
we
wallet. But guys, be careful, because there are a lot of platforms doesn't mean you can go and use any platform. Especially when it comes to connecting your wallet, you have to ensure that platform is trusted, and that platform isn't a platform that is just going to basically try to
Amek,
dupe you of your money.
Amek, based on the
Yeah.
wallet connection part, there's this one I use, CoinStats. So all you need to do is just input your wallet address. It
Do you want
will
to share your screen?
bring up everything. Just paste your wallet address, everything will come up. So you don't need to connect your wallet in case
So
of illegal
um
stuff
I
like
am
that.
just learning about CoinStats today.
CoinStats.
Thank you, Priest.
And CoinStats covers thousands of cryptos, even shit coins. If you have shit coins in your wallet, it will bring out the value for you.
Okay,
And
let me quickly share my screen
you are not
and share
connecting your
what
wallet.
Elpris is talking about. All right. So this is CoinStat, right?
Yeah.
And you basically just type in your address here.
No, you create accounts probably with your Gmail and
Okay.
just add portfolio. Then you just paste your wallet address there. You don't need to connect the wallet.
Okay. Okay.
Yeah.
Okay. I get you.
Awesome.
Nice. So, but I like to always keep it simple for our new users, right? Start with the simplest ones and then complicate your life later. Start off with CoinMarketCap or CoinGecko. Once you log into your wallet or your accounts, you click on portfolio and you'll be able to take it from there, right? You'll be able to add things into your portfolio. You can create a portfolio, you can add new tokens. It's actually very straightforward. Let's say I want to add ADA. I'll now select how many. What we are doing here is we are selecting the amount of ADA we have. Maybe I have 100 ADA and I want to add that to my crypto holding portfolio. If you see, it has increased my portfolio somehow. So the assets I hold are all of this, blah, 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 right? So try to use CoinMarketCap. Once you go to CoinMarketCap, click on portfolio. Either you click on portfolio or you come to your profile and go to portfolio to start playing around with it. Good things about CoinMarketCap is you can also learn and earn on this platform, right? So you want to start looking at how to. I think the first task for new users is to understand how CoinMarketCap works, what CoinMarketCap is, and how to use it for the greater good of your portfolio. Um, I think we are good to go, my people. I'm not seeing too many questions here, but I know that we have dished out enough information for this episode. Till we come your way next time, guys. We always like to take feedback from you. Let me see if I can quickly pick a form and share with you. We already dropped our Telegram handles, right? You need to join our Telegram handles to be able to share, ask questions, drop contributions. All of the communities on Telegram are there for you. I dropped a Google form. It's a feedback form. We like to hear from you to know what you would like us to talk about in our next call and what you like us to work on in terms of explanation and all of that. Any last words from you guys? Amek?
Basically, newbies especially should just take some caution or should exercise some caution when it comes to getting into the crypto market. I know the crypto market is somewhere that you are going to see pretty interesting tech. You are going to see people with really awesome ideas, and those ideas are going to sound nice, but it's not every idea that you have to invest in. Some of those ideas their their plots to take your money away from you, and that's just it. So you have to be very, very careful. Then when you are active on Twitter, because I heard El Priest also said you have to be update on Twitter and follow some guys on YouTube as well as some crypto community. One thing you have to put into consideration is also the fact that there are people who basically tell you to buy coins that are not worth buying in the first instance. It's called shilling basically in the cryptocurrency ecosystem. So you have to be careful. You have to ensure, even if someone is telling you to buy a coin, it's actually worth buying. Not because someone tells you to buy a coin, then you just go ahead and you buy it. You'll probably get wrecked. So do your own research, do your own analysis, make sure you know what they are doing, and don't just listen to the noise. Even if you listen to the noise, filter it.
Yeah, yeah, sure. Thank you so much, Amek. El Priest, final words.
Okay. I don't have much to say. But in my own opinion, I believe this space is here to stay. Like this technology is here to stay. So there's no need to rush. There's no need to jump on everything because you cannot buy everything. I made the same mistake last year. I was trying to get into every gem I can get hold of, and it ended up badly. So don't rush. Take it slowly and steady. Always do thorough research on whatever you are going to buy. Everything looks good at first until it stops looking good, because in this space, it's money is flowing from the stupid to the wise ones. So money is going from the fools to the wise ones. So try not to be at the losing end. So be careful, tread carefully, um avoid Stay away from scam projects, learn how to spot them, and you are good to go. And just buy a few gems, hold for 3 to 5 years, and that's all.
Great stuff. Thank you guys so much. I really appreciate your time. We would do this sometime in 2 weeks, I guess. By then, would have gotten some more feedback from the community on what's next to talk on. Right, I'm very excited for to have had you guys on the call. Thank you so much, everybody, for being a part of it. Catch you all next time. Bye, guys.